What's up, guys? I'm back with another video. This one's going to be on the housing market, and the question is going to be, is there a housing crisis in America? Yes, the United States is currently experiencing a significant housing crisis. As of 2024, the nation faces a shortage of approximately 4.5 million homes, a deficit that has been growing over recent years. This shortage has led to escalating housing costs, making homeownership increasingly unattainable for many Americans. Factors contributing to this crisis include restrictive zoning laws, underinvestment in affordable housing, and an increased corporate ownership of single family homes. For instance, institutional investors now own about 25% of single family homes, creating additional barriers for families seeking homeownership. In response, various cities and states are implementing measures to address the crisis. New York City, for example, is converting office buildings into residential spaces to increase housing availability. Additionally, intergenerational home sharing programs are emerging as innovative solutions to provide affordable housing and reduce social isolation. Despite these efforts, many Americans continue to struggle with high housing costs, leading to financial strain and feelings of entrapment in homes they can barely afford. Addressing the housing crisis remains a complex challenge requiring coordinated policy interventions and community based solutions. So, the housing crisis in the U.S. is driven by several key factors. Housing shortage. There aren't enough homes to meet demand. The U.S. is short about 4.5 million homes due to years of underbuilding. High costs. Home prices and rent have skyrocketed, making houses unaffordable for many. Rising mortgage rates and property insurance costs add to the burden. Zoning laws and regulations. Restrictive zoning policies limit where and how housing can be built, slowing development. Corporate ownership. Investors and corporations are buying up single family homes, making it harder for regular buyers to compete. Wages not keeping up. Housing costs have risen much faster than wages, making homeownership and renting increasingly difficult. Lack of affordable housing. There aren't enough government subsidized or low house costing options for lower income families. Pandemic aftermath. COVID-19 disrupted supply chains and labor markets, increasing construction costs and delaying new housing projects. These issues combine to create a crisis where many people struggle to afford stable housing. So now raises the question, is BlackRock or Vanguard involved? BlackRock and Vanguard, two of the largest asset management firms, have been accused of contributing to the housing crisis, but their actual role is debated. Here's the breakdown why people blame them. Buying single family homes, large investment firms, including BlackRock and Vanguard, have purchased residential properties, sometimes outbidding regular home buyers, driving up prices. Institutional investors often buy homes in bulk, reducing supply and increasing competition, which can drive up prices, turning homes and rent into rentals. Some argue that these firms prioritize renting over home ownership, making it harder for individuals to buy homes. Profit-driven policies. Critics claim they prioritize returns over affordability, influencing housing markets through financial instruments and investments. The counter-argument. Small share of the market, institutional investors own only about 2 to 3% of single-family homes, meaning their direct impact on housing prices is limited compared to broader issues like underbuilding and zoning laws. Bigger factors at play: high construction costs, actually, restrictive zoning, and low housing supply play a much larger role in the crisis than corporate ownership, providing rental options. Some argue that institutional investors help meet rental demands in places where people can't afford to buy. While BlackRock and Vanguard are involved in real estate investments, they are not solely responsible for the housing crisis. The issue is complex with many contributing factors, including government policy, supply shortages, and economic conditions. However, their role in housing markets, especially as landlords and large scale investors, remains controversial. So we say that for entertainment purposes only. And then I'll put a link of all of this stuff of like all of like the links for all this information in the bio. I mean in the description. The idea that a housing crisis is part of a larger New World Order plan is common theory in conspiracy circles, quote unquote, so they say. The general idea is that powerful elites, including major financial institutions and governments, are working to consolidate control over assets like housing to increase dependence on centralized systems. Arguments from the New World Order perspective: financial control. By making home ownership unaffordable, people are forced into renting, often from large corporate landlords, reducing individual financial independence. Wealth concentration. A small group of elites and corporations gain control over land and property, shifting wealth upward. Increased surveillance and dependency. As more people rely on government assistance, rental properties, and digital financial systems, personal freedoms could be restricted. 15-minute cities and smart housing. Some argue that urban planning initiatives, example 15-minute cities, are designed to limit movement and increase control over daily life. So the counter arguments for that is the housing crisis has more tangible economic causes: underbuilding, zoning laws, rising costs that don't require a grand conspiracy. Even though institutions like BlackRock and Vanguard invest in real estate, they are primarily profit driven rather than working towards a hidden global agenda. Decentralized real estate markets, state by state laws, private ownership make coordinated global control difficult. While corporate and government policies have undeniably contributed to the housing crisis, attributing it entirely to a New World Order plan requires a leap beyond the available evidence. However, if one believes in a push toward centralized power, the housing market could be seen as a tool in that broader strategy. In cities like Las Vegas, large investors and corporations have been purchasing significant numbers of residential properties, which is contributing to both the housing crisis and shifting the market dynamics in several key ways. Here's an angle on what's happening. What's happening in Las Vegas? Mass purchasing by large investors, companies like Blackstone, Invitation Homes, and institutional investors have been purchasing single family homes in Las Vegas in bulk, often outbidding potential home buyers. These companies then turn these homes into rental properties. Rising home prices and rent. As large firms buy up more homes, the supply of available properties for individual buyers shrinks. This reduces competition and pushes home prices up, making it more difficult for local residents to afford to buy homes. At the same time, rental prices increase, making it harder for people to rent at affordable rates. The corporate landlord effect. Large investors, especially private equity firms, have the resources to buy distressed properties or large amounts of real estate in cash, further shutting out individual buyers. These firms can afford to hold properties and wait for the market to rebound, increasing their profits. Displacement of residents. As homes are rented by these companies, long-time residents are often priced out of the market. Many renters in Las Vegas face rising rents while homeownership remains out of reach, resulting in housing instability for many locals. A broader trend. This is not unique to Las Vegas, but a trend seen across the U.S. in cities like Phoenix, Atlanta, and others, where investors see real estate as a stable and profitable asset. In fact, in 2021, institutional investors purchased around 24% of all homes in the U.S., according to some reports. Why is this concerning? Concentration of wealth. When a few large companies control a significant portion of housing, it leads to a concentration of wealth in the hands of small numbers of entities, making it difficult for individuals to build wealth through homeownership. Rising rents and limited options. As large investors continue to buy up homes, it limits affordable options for both renters and home buyers, further exacerbating the affordability gap. Long term impact. Over time, this may lead to a housing market where renters significantly outnumber homeownership, shifting the traditional model of the American dream. Local impacts of Las Vegas. In Las Vegas, homeownership declined. Many residents in Las Vegas, particularly in more affordable neighborhoods, have been priced out of the housing market due to large corporate investors buying up homes. Gentrification. Areas that were once affordable for lower income buyers are being gentrified, leading to increased displacement as rent rises and homes are renovated or sold to wealthier buyers. In summary, corporate investors buying up large quantities of property in Las Vegas and across the U.S. have had a significant impact on housing affordability, pushing out local residents and driving up both home prices and rent. This trend reflects a broader shift in the housing market where wealth is increasing, concentrated in the hands of large institutional investors. So, and here are the actions strictly the American people could take to fight corporate control of the housing market: organize and advocate, community organizing, join or create grassroots organizations focused on raising awareness about the negative impact of corporate real estate investment, form tenant unions. Renters can come together to collectively negotiate with landlords or investors, help to ensure fair rent prices and better living conditions. Support cooperative housing models. Invest in or support housing cooperatives, which allow community members to collectively own and manage property. Boycott corporate landlords. Avoid renting from large corporate landlords. Choose to rent from independent landlords or consider alternative housing models like co ops, reducing demand for corporate controlled rentals. Boycott investors if possible. Individuals can refuse to do business with companies like Blackstone or Invitation Homes by avoiding the rental properties or real estate projects. Support affordable housing initiatives. Invest in community land trusts. Participate in or donate to CLTs, which work to provide affordable community owned housing. Volunteer for affordable housing projects. Volunteer time or resources to help build or support affordable housing projects in your area, particularly those that are community driven. Raise awareness and educate. Publicize the issue. Use social media, blogs, or podcasts to spread the word about how corporate investment is affecting housing prices, rent, and availability. Host educational systems. Organize local forums, workshops, or community events to educate others on the housing crisis and ways to address corporate influence in the market. Support ethical investment practices. Invest in local real estate projects. Choose to support or invest in local based ethical real estate development projects, avoiding large scale profit driven corporate ventures. Promote socially responsible investments. Advocate for and support companies or investment funds that prioritize sustainable, community focused, or driven housing development. Engage in economic activism. Boycott corporations investing in housing. Actively avoid supporting large companies that are known for buying up residential properties and contributing to the housing crisis. Support local business owners when possible. Support small landlords and independently property owners rather than large corporations. Legal and financial action. Join or create legal challenges. Support or create legal efforts to challenge unfair housing practices such as corporate monopolies in the real estate market in court. Lobby for new housing legislation. Advocate for policies that protect renters and first time home buyers from being priced out by large corporate investors. Mobilize for collective economic change. Crowdsource community housing funds. Use crowdfunding platforms to raise money for community housing initiatives or to help families avoid displacement. Participate in local housing campaigns. Get involved in campaigns aimed at limiting corporate ownership of residential property or advocating for more affordable housing options. Change consumption habits. Support ethical real estate developers. Support developers who prioritize creating affordable, sustainable, and community driven housing projects. Avoid speculative real estate investment. Refrain from engaging in speculative housing investments that drive up prices and contribute to corporate consolidation of real estate. By taking these steps, the American people can begin to push back against corporate dominance in the housing market, raise awareness, and promote more sustainable and affording housing solutions. We've had about 5 major housing crises in America, and here's the timeline. Throughout the U.S. history, there have been several significant housing crises, each driven by different economic, social, and political factors. Here are some of the most notable housing crises. The Great Depression in 1930s. The stock market crash of 1929 led to a widespread economic hardship, including widespread foreclosures and mass unemployment. The impact: many Americans lost their homes due to an inability to pay mortgages, leading to widespread homelessness. Construction of new homes essentially came to a halt. Government responses. The federal government intervened with programs like the New Deal and the establishment of the Federal Housing Administration, which aimed to stabilize the housing market and provide affordable mortgages. The second one, post World War II housing shortage, 1940s to 1950s. After World War II, the U.S. experienced rapid urbanization and a baby boom, which resulted in significant demand for housing. The war had caused construction delays, and there was a backlog in building homes. The impact of shortage of affordable housing for the growing population led to overcrowding in cities, and many families struggled to find homes. The government's response to the GI Bill provided veterans with home loan benefits, stimulating construction of new homes and helping to address the shortage. The third one is the saving and loans crisis, 1980s to 1990s. The caused deregulation of the savings and loans industry in the 1980s led to risky mortgage lending practices, with many institutions offering loans to high risk borrowers. Impact: This contributed to widespread foreclosures and a collapse of the savings and loan sector, which destabilized the housing market and led to a slowdown in the construction and sales. The government response, the Resolution Trust Corporation, was established to manage the assets of failed savings and loan institutions, and housing markets were slow to recover. The fourth one, the housing bubble and the financial crisis, 2007 to 2008. The housing bubble was caused by subprime mortgage lending, high risk financial products, and unsustainable home price inflation. Banks and lenders offered mortgages to individuals who were unlikely to afford them. Rather, impact the bubble burst, causing a massive foreclosure crisis with millions of Americans losing their homes. Home prices plummeted, and many people found themselves underwater, only owing more of their mortgages than their homes were worth. And the government's response, the Troubled Asset Relief Program, and other bailout measures were introduced to stabilize financial institutions. The Housing and Economic Recovery Act of 2008 aimed to provide relief to struggling homeowners and stabilize the market. The fifth one, the current housing affordability crisis in the 2020s, a combination of factors, including a shortage of affordable housing, rising construction costs, stagnant wages, institutional investors buying up residential properties, have contributed to a growing affordability crisis in many U.S. cities. The impact, how prices, home prices have risen dramatically, making it increasingly difficult for first-time home buyers to afford homes. Renters also face soaring rental prices as large investors have bought up significant portions of the housing stock. The government response, while various state of the federal initiatives aim to address affordability, the crisis continues, with calls for stronger rent control measures, zoning reforms, and policies to curb speculative and real estate investments. There have been at least five major housing crises in U.S. history, each characterized by unique factors, but all linked to economic instability, speculative practices, and a mismatch between housing supplies and demand. Today, the ongoing affordability crisis is exacerbated by both the shortage of housing and the growth influence of large investors. How will the fires in LA affect the housing market? The devastating wildfires in the Los Angeles County during January 2025 have significantly impacting the housing market, leading to increased challenges of the both homeownership and renters. Property losses and economic impact. The fire destroyed or damaged over 16,000 structures, including more than 10,000 homes. The total economic loss are estimated between 95 billion and 164 billion, with insured damages potentially reaching 75 billion. The housing supply and demand, the destruction of thousands of homes have exacerbated an existing housing shortage in LA, with many residents displaced. The demand for available housing has surged, intensifying competition and driving up prices. This situation is particularly challenging given more than 95% of apartment units in LA were occupied as of 2024. The rental market challenges in the aftermath of the fires, some landlords have increased rents by 15 to 20%, violating California's price gouging laws that limit rent hikes to 10% during emergencies. This has made it even more difficult for displaced residents to find affordable housing. The insurance and rebuilding costs. Homeowners whose properties were destroyed faced the difficult decisions of whether to rebuild or sell. Rebuilding costs have soared, with some estimates indicating that reconstruction a home could be more expensive than purchasing a new one. Additionally, the fires have led to increased flood risk, further complicating insurance and rebuilding efforts. Long-term outlook, the housing market in LA is expected to remain tight with limited inventory and rising prices. The combined effects of property losses, increased demand, and higher construction costs are likely to persist, making it a challenging environment for both buyers and renters. And then that's just kind of the gist of it right there. So yeah, that's what's going on with the housing crisis right now, and hopefully the bubble bursts sometime soon. But as of right now, it's a very tight market.